Ladies and gentlemen, welcome to the SoFi Weekly pre-show. We're not really sure what this is quite yet. It's the Market Madness. What are you calling it, Roy?
I just stole the name that you gave it, Market Madness. So, we may not always have this, but in a hectic, busy week with lots of news where we have a lot that we want to cover, we'll definitely look to do something like this before the SoFi Weekly, which we're not having this week. So, we may even discuss SoFi from time to time.
Are we having it tomorrow? I thought it was tomorrow.
Oh, SoFi Weekly?
Yeah.
I
Did
didn't
he
think we
say
were
he's
having
not
it at all.
available?
I guess we'll have to get our
Oh,
ducks in a row.
no. Sorry, you're right. You're right. He said he's busy.
Yeah.
Yeah, okay. My bad. I thought for some reason I thought that we were doing this tomorrow. But it's a good sub for that show, and I couldn't resist talking about, SoFi. We got some PayPal stuff that we want to talk about, obviously. Robinhood, that's a very exciting one. Maybe some Tesla, maybe some other AI stuff if we're talking about strategies for 2025. But overall, Roy, how are you? You had a good holiday and everything? I haven't seen you since.
Yeah, been doing a lot of driving in my Tesla, and that'll feed right into the Tesla stuff that we'll discuss. Nothing like firsthand experience, and even talked to a Tesla engineer, which was fun. But it was a really good holiday. Seemed like it flew by, but like 2,500 miles of driving in a week and a half was a lot. So
Yeah,
glad that that's done. How was your holidays?
it was good. Spent some time with family, but I didn't even really take too much time off. I took a little bit of time off from YouTube, but um, we missed you on the Robinhood Weekly. I think it was 2 weeks in a row that we didn't have you.
Yeah. I actually ended up watching. I didn't see the first one of those that I missed, but I saw the second and some of the numbers that were covered, and of course my replacement. So he was very good. Actually, he out spreadsheeted you, so that was pretty impressive.
Yeah, Joshua was great. Joshua was phenomenal. So, really happy with what he covered, and potentially we can cover a little bit of that today as well, because between then we got the December numbers. December numbers we saw, December 1st to December 27th, not even excluding the potential other 4 days that people are missing.
Yep.
So it is looking bullish right now.
Yeah.
Now, do you want to start there? Where do you want to start?
I guess let's actually start with SoFi because we're going to get asked that, and then we can just tell people as they're asking in the comments, like, "Hey, we go back, and we'll talk about that." So it feels a little bit like deja vu so far, just starting out this year, and I'm glad to see a nice green rebound on pretty much everything. It just was like opposite day, and of course, SoFi had a nice downgrade by our maybe not favorite, but KBW.
Yeah, our favorite
KBW,
analyst.
yeah. So this happened in January. I don't know if it was right at the first of the year, but it was very close. And if you look at actually go back to last year, just because you can see similar price action.
Or even further.
Yeah, just a little bit further than actually no, that's it felt like our peak was like around January 1st or 3rd or something. Oh, actually it peaked in
But this might be the moment you're talking about
okay,
here.
yes, yeah. Basically, KBW came out in early January, and SoFi never recovered in price until much, much later in the year. It was actually even similar arguments, and if you look at data-driven investing, did a great breakdown on the post. Their predictions that they made. They even recommended at one point shorting SoFi. Hey, that would have been a good trade if somebody got in at the right time and got out, but all the reasons that they gave on SoFi, including fair value on their loans, their earnings. They thought that they would be EPS negative by 2 cents. They under appreciated their revenue by it was double digits. If you were giving a grade on these predictions, like you would give these guys an F. Like they just absolutely were all over the place. And the craziest thing is they did it again. And it's very odd because they used very similar reasoning. And I don't know. I looked at their note. Sometimes even bearish notes are helpful just because they can point out some things. And we'll be looking at some bear arguments on a couple of names here today too. But it can be useful. And I just didn't see anything that was new, that was noteworthy, that was even worth considering that hadn't already been brought up. And so, but it's price action. The other thing too that I thought was interesting is, I was traveling, or I just gotten back from traveling, I believe. And I was like, man, there's all these headlines with the KBW downgrade. I was like, I don't remember these guys being that big of a deal. Then I remembered, I think from one of your guys' posts that they did this in January. And I think Chris mentioned that there was 14 headlines that he saw that were just KBW downgrade of SoFi versus any other, and actually a Deutsche Bank, I believe, actually give an upgrade and a bullish price target, and didn't make any headline news at all. And I don't want to say it's a conspiracy. Oftentimes it's not. It's just the algorithm doing algorithm things. But man, it sure feels like deja vu. But I think that this time is going to be different. I don't think that SoFi is going to keep selling off for 9 months. Could be surprised. What do you think, Tanner?
Well, so this one is much closer, I think, or maybe it's not. Maybe it's in a similar range. But earnings is coming quick this season, and I'd actually be very surprised. Hopefully, I maybe you have more information than I do, but PayPal has not shown off when they're doing earnings yet. That they do not put on the same day as SoFi. So between this report by KBW and when SoFi actually reports on January 27th, which is pretty early, hopefully that doesn't have a large impact, but generally I think that the quarter will speak for itself, and that whenever they do release that, then people will be pretty surprised to the upside of what SoFi can actually deliver. It does seem insane that they continuously look at these reports from KBW as being credible whenever they are always so drastically wrong for this specific name. I'm not going to say that every piece of work that they do is wrong, but on SoFi from Timothy Switzer's team has just been false.
Yeah, and I mean, you need to have a certain amount of humility, even if you're an analyst, that there are some companies and maybe some industries that you just don't get, that you try to predict, you try to look at, and you're just missing it. And it's okay to just throw up your hands and say, hey, maybe another analyst needs to cover this in the same firm. They have multiple analysts there. Or just say, you know what, let's stop making ourselves look idiotic, which I think SoFi will probably prove, the same in this case. But the other thing that was giving me a little bit of deja vu vibes, it happened before the end of the year, but of course, this is old news now for all you guys, but I was gone traveling. Jerome Powell, of course, mentioned in the Fed notes that they were actually looking at fewer rate cuts potentially this next year. And so certainly that
a while,
is, oh yeah. It's a little bit out, rewind a little bit, but certainly that's not been good for the price action of SoFi, and that's actually warranted. That's a lot more warranted than this report from KBW. Right. But if we go a whole year or most of a year where there's no other rate cuts at all, that'll have an impact on SoFi. It's harder to sell some of those refinancing products. So
yeah, that's 100% true. I think that report should have even probably had a larger sell-off than it actually did. This is nonsense what's happening over the last couple of days with KBW. And in fact, actually just over the one day, because today, the day after, it recovered pretty well. Yeah. And hopefully continues, but it just goes to show you okay, in a 2-day period, SoFi got a massive sell-off and then Lending Club got an upgrade because the environment's very good for a company like Lending Club.
That makes no sense.
It's
and the best thing is though, I wasn't looking to add SoFi. I didn't add SoFi, but if you are following a stock closely, like SoFi, and you're hey, on a credible dip, not, the rate cuts being fewer over the year, I don't know that that's a dip I would have bought. But from this, I would have been okay, this is absolutely nonsense. It could keep giving negative price action for a while, so I wouldn't buy options, but that's a great place if you're convicted in that name. If you're SoFi is great, it's going to have a great year, and this report is utterly nonsense, that's an opportunity. That's not something to be mad about. So you can be frustrated that people, just kind of regurgitate the same report, and seem to like Lending Club a lot better than SoFi for some reason. I don't know. Fair value accounting, I guess.
Yeah, yeah. And even in that report, it was a whole bunch of janky nonsense like adjusted capital ratios, which is a metric that they created to fit their narrative. I don't know. It's just a little bit silly in my opinion, but who cares? SoFi is in the metric of trying to put out real fundamental results. It's not like this is the first report that's come out that's been negative. This has happened quarter after quarter after quarter. It just seems like in the last couple weeks before SoFi reports, there's always a little bit of nervousness in the market. I feel like we have this every single time. And then we wake up that morning, see the numbers, and then we go, oh my gosh, okay, let's continue. We get to party on for another couple weeks at least until the nervousness sets back in. And then our job as YouTubers is just calming people down, going, hey, look what Anthony Noto's done for the last couple of years.
Yeah, I mean, it's just the craziest thing too is when you take it. I think it's even below the midpoint of their guidance through 2026 that they were looking at and saying that this is going to be very difficult for them to reach these targets. And you see how conservatively SoFi is guided. Even the remarks that they say, like assuming no extra business or anything else that they do, just coasting, not quite coasting, that they'll hit these targets. I would be inclined to trust the people that keep hitting it again and again and again and actually exceeding it by quite a bit. So, but hey, KBW, you do you. You got to get those clicks somehow. And hey, it worked for a day. So congratulations.
Do you care if I potentially throw the AdSense away on the video?
Oh, you mean the monetization?
Yeah.
It's fine. It's like $5.
I might not be throwing it away, but I might be as well. I want to show you a video. I'm going to keep it muted, and I'm only going to show, like, I'll keep our cameras up, so I think we'll be fine.
Now, if you're going to show it and they're speaking, could you like use drama and kind of like enact the lines?
Yes,
Use
yes.
accents too, if you can.
I'm going to do exactly that. That. So this is a video that was just put out a couple days ago. It's climbing up in the total viewage already. In 2 days, it's got 426,000 views from 4Play Golf. And let me just show you a little bit, because I think that this is very interesting. The stadium's finally built. They're going to have their first game January 7th. And they actually, if you guys want to watch this full video playing at the TGL Stadium, it'll be the first one whenever you look it up. This stadium looks insane. This is world class. So, by the way, the SoFi, advertisements are not few and far between. They are everywhere. The cup is called the SoFi Cup. It's got SoFi everywhere. The banners at the actual sandbanks here are SoFi, and they're static. These won't go away, at least from my understanding. Maybe the banners or something, they might end up changing those to be something else. But the SoFi logo is here, the SoFi logo over here, all of it in the thing. There's a big hard sign that says "Get your money right" on the other side. So it's not just the name; it's also alluding to the fact that it's a bank. But yeah, these guys end up showing off here. Let's show you real quick. They have this shot clock system for this sport where they have essentially 40 seconds per shot to make their decision. There's no shot clock on any sort of a golf league currently, to my understanding. So they can set up how they want to take these shots, which align the simulation to do so. It'll tell you how far you're shooting, everything along these lines. So you can kind of see that here. So you can play out the course, but everyone was wondering how, which by the way, look at this. This is the normal size of the largest current simulator that you can buy on the market. This is a professional simulator, is what they're depicting right here. And this one is the one that the stadium you'll be playing at, is this full screen. So it'll actually look like that instead.
That's nice.
Isn't that crazy?
Yeah.
So depending on the shot that you're going to take, it from these three different things. And then they built here. Wait, let's see here if they end up playing a game. I'll show you. But this guy ends up hitting the ball or whatever. You're right. Did I miss it already? Where is it? No, he takes a timeout. I watched this whole video yesterday, but right before, so he's got 30 seconds to take this shot. Once he shoots, the ball launches and it gets much closer to the actual hole. I think they do one more shot from a closer range because they're not driving. So the other guy goes because it's a team game. Let's see here. This guy ends up going. But what I want to show you is this system that they actually created, because I think this is super cool. So on the simulated place here, how are you actually going to putt into the hole, right? How can they create a way for them to make this system so then it's actually fair, because every bump and everything, they can't edit the landscape of inside the stadium to address all these humps and the sandbanks and everything. Well, turns out they can. If you look here, there's a projector at the top that realized where on the actual field they noticed where the ball landed. And the projector shoots down the ball and said, hey, you actually need to drop your ball right here, because that's where it was in game. And then there's this circle here, which you can kind of see outlined right here, which has a weight capacity of 700,000 pounds. Okay. And it will, every map has a similar sandbank and everything, but potentially in different coordinates. So it's a turning table. It can spin. And they also have these pressure points that adjust the terrain to what it matches in game. So if you have something where it sort of banks up on the left and sinks down in a certain area, the actual land has a machine underneath that will adjust the land to that setting. They have a part in the video here where it shows it like editing itself in mid-time. By the way, this robot will be here in the thing as well. Anthony Noto was not here. I was hoping to see him. He was not, but that's fine. Where was it? They show off a section where you can actually see the land transforming. But you can watch him take his shot here. SoFi all over the place. This is their next big stadium. And not just stadium. They're sponsoring the whole league. They might have actually paid for this thing more than what they actually paid for the SoFi Stadium. This is my belief now. It's not just the naming rights. This is everything. Like, I don't know if we'll be able to see it. I don't remember where it was. Yeah, and because it's a simulated game, they can play on these areas that like you just simply wouldn't find anywhere else. And so they can play on these games where it would be very risky to take shots here versus over here. So who knows? This might actually catch more popularity than what we think. But oops. I just wanted to show that off because obviously there's a ton of money going into this. It's all new tech. They're bringing in like brand new systems to sort of try to create this sort of terrain altering experience. Very cool. SoFi is splattered all over it. The exterior of the building, the interior, it just looks insane. And now there's videos starting to come out of people actually using this. They're going crazy with different Barstool members doing live streams and everything like this. So it's just getting a lot of traction right now. Hopefully on January 7th, we actually see that like on ESPN that it sees a lot of traction. Could be a great way to get SoFi's name out there, and potentially it may be said a lot on the commentator desk.
Sure. And one other thing, too, related to that, it looks like the LA Rams are the number one seed in the NFC West. It looks like that they're guaranteed, unless I'm missing something, a home playoff game at least. Chargers are also in, but it looks like they're going to be away probably for if they even last. Yeah, another good thing for SoFi Stadium and name recognition. Can't wait actually to see Q4 and just see what that member count does, from football season. So, but these are very good things.
And not just football season, also like the first sort of quarter where we have the loan platform business. Like I'm really thinking that we're going to see a big ramp up in potential loan products for people that don't just cross sell the loans, but ones that we actually go out and acquire directly for loans. I think that that'll be big this season.
Yeah, could be going to zero though if David Cavarini's right, but no, just kidding.
Could be if Timothy Switzer had his way with it. This is a bank that has no business, underwriting loans that they're not going to hold for themselves. Why would they ever do such a thing?
How dare they make money?
Yeah. In any other way other than through their tangible book value.
Mm-hmm.
All right. Yeah, NBA too. Yep, that's true. They have the official bank partner of the NBA, but that's a much smaller partnership. I think that's only mentioned a few times. But yeah, I'm really trying to find this spot on the video because I think as you're watching the terrain shift and everything, it is crazy. Because it's one of those things in golf of like the understanding of like every shot that you potentially could be taking in golf is, although it might be fractions of difference, it is a different scenario. So if you're playing on the exact same field every week or just shooting into a simulator, are we playing golf or are we just driving into a screen? So this sort of technology is the only way that this would be able to work. And that was the biggest critique of this new thing is, hey, they can't make the terrain move mid-match. Well, turns out they can. It's pretty interesting.
Mm-hmm.
Timothy Twizzler. Okay. Anything else on the SoFi new advertisements that are coming out?
No, I think we could say that for a legit SoFi Weekly. There's some stuff like lending stuff that was just kind of smaller, but we'll save that for another time.
Got you.
Market madness, baby.
Market madness. We push on. I'm still going to try to get that video, but I'll switch it over for now. Let's move on to Robinhood really quickly, as you may want to talk about another one. I am not going to let you push this any further. I've been wanting to talk about this with you.
Let's talk some PayPal. No, just kidding.
Yeah.
We will.
So, December numbers have released. Buy now, pay later. The different metal cards, the rose gold metal cards, platinum. What else am I missing?
The giveaway of
giveaways.
$2.5 million, both from this year for Doge and then next year, just because of the way it fell for Bitcoin. So $5 million.
And it didn't just fall that way on accident. That was for good reason. But yeah, crazy. Where do you want to start?
Well, you mentioned, we're both very bullish on Robinhood, and you've done number crunching. You have the spreadsheets. You have the guesstimated revenue. I haven't done that yet. If you want to talk about like just how this year is primed for Robinhood, and then let me give some pushback, not on what I believe, because I'm equally bullish.
You're steel manning it.
Yeah, but I want to basically say like what could go wrong. Just so it's going to take both sides of it. One of those things I did when I was first getting into PayPal is like, well, let me look at the actual bear case, and there was a bear argument, but it wasn't really what the bears were saying at the time. So let's take a look at the bull side, and then we'll go to the bear.
So it's going to be on the right side of the screen, just because I have some information further over to the right that I don't want to give away just yet. But this is the presumed quarter. Not presumed. I mean, these are the numbers that they put out, however, unaudited, for trading volume in 2020, Q4 of 2024, October, November, December, which essentially for these types of brokerages tells us a large part of their overall earnings. A large amount of the overall surprise gets taken away. Like imagine if SoFi every quarter told you how many loans they originated or how many loans they've sold in a single in each month. There wouldn't be as many bears being able to come out with these types of positive revisions each month. Vlad says, if something does go wrong, I'll shut it down. JK. That's not the real Vlad, by the way.
And just so you guys know, those December numbers, they're not including a couple more trading days as well, especially for crypto. Will be
Hold
lighter
on.
volume.
Hold on. I got it over here. I got it.
All right.
We're going to show it off. But anyway, assuming that these are the full 3 months, in December was only slight amounts. We didn't get to see customer numbers, total assets under custody, anything like this. Only the trading amounts. This crypto volume, Roy, could you have guessed 28 billion for December?
No. I thought it would be good, but not that good. I wonder how much of a factor, and I don't know if they'll talk about this. Hopefully, an analyst will ask them this question as well. Hey, we can ask on Say Technologies too, which Robinhood owns. How much of that is due to those new coins that they've offered since November? And of course, they dropped, I think, 1 or 2 in December. I'm just kind of curious. I know that there's some people that will not buy tokens if they're not on an easy to access platform. Like maybe they don't even like Coinbase, but like Coinbase or Robinhood. So, and of course the trading fees are really, really low. So that was absolutely phenomenal. And of course, it seems like January's off to a good start. It's early, but these may be an epic couple of quarters for crypto.
Yeah. So you spoiled it a little bit, but yeah, it was only December 1st to December 27th that they looked at, which was 19 out of the potential 21 trading days for all of December and 27 out of the 31 potential trading days for crypto. So once we actually looked at their daily averages and then added those in, now there was some people talking about the end of December was by far the weakest out of the month, that it might actually be lower than this. So I might actually be bringing up my bullishness here. But just taking it with easy math and not trying to extrapolate out the, specific, daily averages. These numbers came out to equities at 151 billion, options contracts sold of 165.78 million, and 32, which might be closer to somewhere around $30 billion in crypto. Roy, how insane is that?
It's not bad. I'll take it.
Not bad. Not bad. So what does this actually do for Robinhood? Well, whenever we look at the company, we can, now that we know the 3 months that make up their total, traded volumes, we can also see, because we've seen how much they make on a segment basis for revenue for each of these segments and know how much they actually trade each quarter, we can actually get a take rate from there, how much they make on that volume. For equities, it's actually gone down over time. It's been this sort of like consistent downtrend, but still healthy enough. Options contracts has sort of also continued in a similar sort of trajectory. You can kind of map that out. And then crypto volume, which is the most exciting one, has gone nothing but up. It's never taken a step down. It's actually more than 4x essentially from where they started just back in, when was that? 2021. And now we are doing so much volume at 4x the compensation that they got back in 2021. And potentially what people are alluding to is that this compensation rate is going to climb even further as they change their pricing model going into, late 2024, early 2025. Let's go ahead and look at what this means for revenue. Options, 220 versus 202 last quarter. So a 9% quarter over change, but a 82% year over year change. Let's just skip over to equities really quick. Equities, a 50% increase quarter over quarter, but 120% year over year change. And crypto, 400% increase quarter over quarter, 612% increase year over year. Insanity.
That is amazing.
Okay. If we also look too, I'm calling this sort of the quarter of crypto because you look at the percentage of transactional revenue that they've sort of held up, and it's been 12%, 20%, some at 38%. but this will potentially be higher than 50% this quarter. So without crypto, this is not nearly as high. Getting close to doubling quarter over quarter, up 200% year over year, just on the transactional side. I'm calling for 600 million in transactional volume, Roy.
Muted the wrong thing. 600 million. Assuming no revenue outside of that at all, that's still a pretty good quarter.
Yeah. If they had but that's not going to be the case, man. Like, look at assets under custody, which is the best way to look at net interest revenue, is how many assets they actually have on platform skyrocketed. And we only know it from November. Okay. So what's going on here?
And of course, gold subscription should be going up. I actually knew the few people that actually subscribed to gold just because of that Bitcoin drop. That won't hit until Q1 of this next year, but I don't know. They must have been on the fence anyway, probably on that gold credit card waiting list. But just, man, this was quite the drop. Like, I had to look for the numbers because I saw them alluded to, because they weren't in the normal place. But very, very nice. Just in time, by the way, for Robinhood Weekly.
Yeah. It was. It's going to be a lot of fun on Monday. I think everyone's going to be very excited, just because of the way that things have been going for Robinhood. The Robinhood Weekly is an absolute hoot. Everyone should check it out. It's a lot of fun.
Absolutely. Even when I'm not there, guys, it's still worth. Like, I'll check in. This is how excited I am about Robinhood. Is I will take time on vacation to watch that video. And I think I watched no other YouTube videos the entire time. I was just like, I want to watch that one with the guys.
Love it. Okay, so can we get a little controversial real quick?
Sure.
There is some talk that we are being paid by Robinhood to cover. I heard some people say that we are on the payroll of Robinhood, and this is why we started a weekly. Are you getting paid?
I would love to. So absolutely, please sponsor us. I don't think that they would want to. We're doing it for free, so why would they bother? We were not asked to do this. We're not paid to do this. If I was not, you'll note I'm new to YouTube. I've been on Twitter for a while, and I'm sure it's the same with you. Actually, even more so with you. I know it is. You'll get spammed with offers of all sorts of different partnerships. And, some people will like sully themselves and let Moomoo sponsor them. No, I'm just messing with you. Moomoo's fine. But there is a lot of like really sketchy stuff out there that, offer, frankly, quite a bit of money to just do this one little thing and I'm a little guy. I have no idea like what they even offer you. YouTube, I'm too small. I think they don't care about that yet. But it's not that I refuse all sponsorships. I'm not an emit where, just like, hey, I'm good. I don't need any extra money. It's like, but, were it offered, I'd be glad to. But yeah, Robinhood, PayPal, SoFi, we've been accused of that. But any company that we're bullish on, apparently, it sponsors us, but that's just not the case. I would love for that to be the case. I would, of course, publicly divulge that too. And I would have no problem doing that because as long as I'm free to talk about the good and the bad. Like if I'm ever put in a position where it's a company I really like, but they're like, hey, we only want you to cover the positive, I can't do that. My integrity is worth more than whatever amount of money that they throw my way. So,
yeah.
Are you getting paid?
And well, I honestly think like if, okay, so one, I've said this a couple times. I want to say a couple things. One, if Robinhood ever wanted to sponsor a segment of my video, like a 60-second ad or a logo or a referral link down below, I'd have no problem with that. If they ever wanted me to push their stock, I'd say no.
Oh, yeah.
Like genuinely so against that behavior that like I tell people, I'm like, this is what I'm doing with my money. You guys, do your own due diligence. It would be so counter what I believe in to push a stock. Okay. Robinhood has been nice to us to invite us to their events, but they're smart. We're really cheap people. So for them to sort of just be nice to us is them just giving us a little bit of their time and letting us go and film and take notes at their events. It doesn't cost them anything extra except making us little badges and offering us snacks at the table. Like that is really what they're paying us is trinkets.
Yeah.
I have a pen and a water bottle behind me. That's what they've paid me.
And it's unconditional. Like they're not doing any of that, like asking us to do anything. It just, hey, if you guys would like to come out to this event, you're invited, and we got to even pay for our own plane tickets. So, and I don't mind doing that. I enjoy doing that. They'll have 3 events next year. It seems like we're going to both be invited to all of those. I can probably only make one, just given the vacation time that I have, and probably won't be the cryptocurrency one, even though that one will be fascinating. But yeah, it's fine for people to ask questions, but just come right out and ask. I saw it rumored a couple of places, and yeah, I don't mind sponsorship at all, but I will never pump a stock to be paid to be pumped a stock. I think legally maybe it's fine. I don't know, but morally it's not right. If I like a stock, I like a stock. If I don't, I don't, and I reserve the right to change my mind. So,
also, though, I was going to say something. I even see people like, no matter what you do, people will say negative things if they don't see the potential in that company or something like this. But anyway, just look at the valuation for Robinhood as they've adjusted their earnings, or go on Seeking Alpha, for example, or potentially there's other data aggregators for this. But I really like Seeking Alpha sponsored.
Seek Alpha is a good one. Like I wouldn't mind, those type of sponsorships, like legitimate companies that I think are actually doing something credible. Like Koifin would be another one. I'm not big enough for them to even be interested, but I mean they're great. So
yeah, and a lot of those, I reach out to them. I say, hey, I like your product. I want to use it more, and I'll talk about it more. If you guys could potentially, let's say, offer it for free, or give me a referral link or something like this, just to benefit us both. But look at this for Robinhood. And are we pumping the stock, or is the stock pumping itself? I mean, these are all Wall Street investors saying, back before, and by the way, look at this. So December of 2024, EPS estimates 84 cents. Then the next 2 years, 9% and 5%.
Yeah.
Like they are super bearish. And this is what the trend line looks like over the last little bit.
And on that, so real quick, throw my slide up, and then we'll do the bear side of this too. So one thing, as you were talking about, how great a quarter it is, which I think we need to remember, they went through this in Investor Day, and they talked about their operating expenses that 90% are fixed. That's really bad in a bear year where there's people leaving the platform left and right, and everybody's assets are going down, so there's fewer assets under custody, and just there's fewer things being traded. Well, it's not really bad. It's the nature of the beast. It's not great, but the reality is when you have a boom cycle like they're in right now, and this is the golden confluence, maybe a little bit less strong this year, but they still have high interest rates, so they'll be able to generate a lot from cash sweeps for probably quite some time throughout this year. They'll continue to make their 1% per year yield on that. Crypto is still in a bull cycle. That may fall to pieces. A little bit more on that later this year. But I think that the equities, I think we're going to be in a bull market unless tariffs do damage to it or something unforeseen. There can always be a black swan, maybe for 5 or 6 years. It's going to be one of those times I think people look back on and like, man, like 20 years down the road, they'll be like, I wish I was alive and old enough to invest back in 2024, 2025. Those were the golden years. We'll see though. So while everything seems to be going right for Robinhood, or most everything, their cost structure is very, very fixed, which is just a fantastic place to be. They're going to print money this year. They absolutely are. Estimates are going up. They look pretty reasonable for not pretty reasonable, a little bit better than they were 2 quarters ago. But yeah, we'll see what happens. The one thing about Robinhood is when the earnings come, there's not many surprises, and this time there'll be even fewer surprises. So, but that's okay.
Yeah. No, I'm stoked on it. Here, I wanted to visualize this for you guys. I can't show you the net interest income just yet because obviously there's a lot of unknowns. Even on the transactional side, there's unknowns. Event contracts, contra revenue, that would be another one that fits over in the overarching company. And then the credit card. So credit card falls under both segments. They would fall under transactional revenue, interchange fees, tapping of the card. And then they'd also fit on the net interest side as cash balances sit on the credit card as debt. So the one that we have a lot of insight into is net transactional revenue just due to trading volumes. And even then the take rates on them, we're not 100% sure. But let's just look at this really quick. Look at this visualized rather than just looking at it in numbers, because sometimes that's harder to see the potential. This is crazy. That's the potential quarter, and it could even be higher. So aside from this bar right here, all of these are guaranteed. This is already GAAP, it's reported. This is speculation, sort of, sort of. Yeah, we don't know the entire take rates. They're not going to change too much. And we don't know the other things that I stated, like event contracts. And then, guys, think about where this goes in quarters to come with futures, with index options, with margin continuing to climb. That's already going to see a big bump this quarter. But as those things go, like, I don't know, that's the exciting thing about this great wealth transfer is the market has its ups and downs. And Robinhood, as everyone likes to say, it just looks much better during these bull markets, but what happens during bear markets? But even in those bear markets, people are still passing away, sending money to a younger generation that could be using, Robinhood as their brokerage, and they'll continue to see a larger, sort of high value customer transfer over their platform, not only from the products that they offer today that are more valuable than before, but the products of tomorrow that they could be offering, like Platinum. Did you see this, Roy, this Platinum?
I did. It'll be interesting to see what that will entail, what extra benefits it will be. For now, it seems like a credible rumor, but they've not launched or announced anything yet. So if they launch that sort of service, I don't know. I liked. Well, we'll have to see what it is. I actually don't know if I love it, simply because their stated mission, democratize finance. It seems very accessible at $5 a month or less if you do the annual fee, especially what you get for gold. I'm sure for platinum you'll get something phenomenal, but to have like a multi-tier service beyond just gold and non-gold,
Are you sure
I don't know if
that's
I
what
like
it
it.
is?
What's that?
Are you sure that's what it is?
No.
So the original person that posted this suggested that maybe it's a $20 to $50 a month subscription. I don't think it is. I think that it's still going to be $5 a month. I showed off a brokerage that we have here in Canada. I actually think they are in the States. They're just completely unknown in the States. But it's Wealth Simple. And Wealth Simple does their tiering of customers based on AUM.
Oh, okay. Yeah.
And what I think is that you are going to have gold members, and then potentially, whether it's 250,000, 500,000, $1 million, could potentially get better fees, access to better customer service. Potentially even like one of the things in here, just maybe taking away the cost of the gold subscription altogether. Why even pay, $5 a month whenever we can just take care of that for you? It's going to pay for itself. It doesn't seem like a lot, but why even pay that pesky fee?
Yeah. No, that sounds good. Especially if it's a six-figure, because hey, I'd qualify. So I kind of wonder if some of that is already being done. That's a normal thing to do, where you have certain, tiers of customer service or accessibility based on either how long somebody's been with the company. We have that with their insurance, although we're probably going to ditch them because they're terrible. And also, assets under custody. So be interesting to see what that actually entails and what it provides as well. So do we want to talk about the bear side?
sure. Am I not thinking of something?
No, not with this necessarily. It's just with Robinhood as a whole. We mentioned, when we were discussing the show that you're gonna talk smack about PayPal, and so that you encouraged me to do the same on Robinhood. Although I love Robinhood, I think it's a great company. It is very cyclical, and I want people that are listening, to this, that are investing in Robinhood, that maybe are newer to the company and they're not aware of this. You need to know this, because when we're not in a golden confluence with high interest rates, with equity bull market, with cryptocurrencies flying left and right, it's not going to be as golden or as good for Robinhood. In fact, it can be quite painful. Let me share with you a window, just as like some throwback reminders. There we go. If you want to throw that.
Sorry.
All right, so let me do this first. So this is a blast from the past, Q1 2023. And so you can look back and you can see, of course, Q2 2021, just the insane amount of, and I'm colorblind, so these greens are tough. I believe that this is the cryptocurrency revenue. And you can just see how volatile it is, from 88 million, 233 million, 51, and then just down as 2023 continued. I think Q3 is when it actually started spiking up. So crypto revenue looks amazing. Of course, the first quarter was very, very good. And it wasn't like that Q2 or Q3 at all, but it can dry up very, very quickly. We can see that as well on the, just from this year, well, really last year, October 2023, crypto notional volumes, 2.3 billion. Well, it's 10 times higher back in March 2024. And of course, quite a bit higher than that for November. December is also 10 times higher than that. But crypto bull markets do not last forever. We don't know when this one will end. I don't think that we're particularly close, but it wouldn't shock me if sometime this year, Q3, maybe, that it actually ends up blowing off the top, and then we enter crypto winter. Crypto winter usually lasts a year and a half, sometimes 2 years. The cycles tend to elongate the older and more mature Bitcoin is in. And institutions are involved, so there tends to be less volatility. That may play a hand in elongating the cycle. So if crypto notional volume does that sort of thing, where it just absolutely tanks, that affects everything. That affects assets under custody. That affects new people actually signing up on Robinhood. That affects, when they launch new products, there's just not that much excitement. And they're probably going to do a lot less of the drops of Dogecoin and Bitcoin. And this isn't the only area that they're cyclical. Yes, they have 9 segments of the business that have an annual run rate of $100 million or more. That's fantastic. But the reality is almost every single one of those, including gold subscriptions itself, is cyclical. In times when the markets are just not doing well, Robinhood as a stock and as a business will not do phenomenal. But like you said, time is on Robinhood's side. They don't have any debt. They just have cash. They print cash right now. They'll continue to do that. They're doing international expansion. They're launching all sorts of different products. Now, the other concern, too, beyond this, the fact that it's cyclical and people need to know this, is the credit cards. We don't know how they'll do, how they'll perform. They seem very optimistic. Every quarter that they talk, and Investor Day as well, they gave some very, very good and compelling answers. But the reality is this is a very new product. It's one of the reasons why there are 2 million people on the wait list. It's a great card. The app's amazing. The rewards are amazing. I'm so thankful I have it. And I'm sad for you that you will never get it because you're in Canada.
Maybe one day.
Maybe, that was part of the interview. It's maybe even Canada, North Korea first and then Canada right after that. But
North Korea first.
Well, okay. So going back to credit cards, there is a concern, and I had a post on this, I believe last week, on delinquencies, just slowly inching up. It seems to be a theme, especially on credit cards and consumer debt. And if that's the case, Robinhood will be caught up in this as well. Even if they do very well and they outperform what other people are doing, that's going to still be a drag. The consumer does seem to be under some pain. And credit cards is a segment that could be very, very good for Robinhood, and I think it probably will be, but there is still a looming danger. We will really not know, I think, for probably 2 more quarters, where that will fall for Robinhood. Thankfully, it's still a very small product, but those are some warning signs just to kinda keep an eye on, see what's happening there. And I think, like, the last thing too is there's a danger of trying to do too much, too fast. Vlad talked about that, of course, in the interview. He talked about that in Investor Day. But they're launching, they're already launched in the UK, but they don't have SIPs or ISAs. Yes, that's coming this next year, options as well. But yeah, they have like 3,000 employees, something like that. So
Under that, yeah.
it's just tough. They're amazing employees. Like I've talked, probably to like 75 different employees at this point. Have deep respect and really admiration for what they've been able to do. But the reality is, even implementing AI, even hiring the best of the best that are highly motivated, there's only so much that you can do. There's a concern of burnout. I think Vlad is guarding himself against that and his team as well. But I mean, they're really ramping up their products, which I love to see as an investor, but that's a concern. So just something to keep an eye on. I don't want to just be like, hey, everything is great at Robinhood, ignore the noise. There are some things we need to have our fingers to the pulse on, and we'll see how they perform this year.
It does also matter on the timeline, I find, as well. Like, if you even look at Coinbase, for example, which is definitely very cyclical, their company has gone through trading a product that has gone through, 90% dips, Bitcoin. You include, the alt class for coins and essentially every other product that they're in, they've gone through massive ups and downs in their business. Yet, as time has gone on, they have gotten a thicker and thicker base and gotten to become a stronger company, more employees. So it does matter your sort of time horizon for Robinhood. Is the next cycle that happens going to be the time that you need to sell? Or can you potentially wait for the next cycle after this? Do you think that during that bearish point that they are going to be stopped growing? These sort of things. I'm just putting a little extra bullishness out there, but it is cyclical. That will happen. But what do they do during those times? Do they crumble, or does the stock price just go down?
Yeah, it'll be interesting to see what they do and how they perform in the next bear cycle. And there absolutely will be a bear cycle. It's going to happen. I think that they're just so disciplined. I'm not concerned long term, but I do want people to understand and know, like, this is still a very cyclical business. Not nearly as cyclical as it was a year ago. The retirement revenues really, really help with that. But it's good to know not everything is just 100% great at Robinhood and foolproof and will always be successful. But, if 90% is, 85% is, we're in a really good spot with demographics.
PayPal. What's your opinion on this? I watched your video, so I know your opinion, but help everyone understand what's happening at PayPal in a quick summary, and are you doing anything about it?
No, I maintaining my PayPal position. I haven't added to it yet. Since I posted a video, 8 weeks ago, I think I bought PayPal at one point, and then that was it. I'll likely, depending on the price action of PayPal, and of course I want to add to HIMS, I want to add to Robinhood as well, and Nubank and Inface. But I'll add some to PayPal, most likely. I don't think that the thesis is damaged at all.
But what happened?
So Honey is a acquisition from Dan Schulman back in 2020. I think they finalized it for $4 billion. Oh, Dan, what were you doing? And it was thankfully slightly better integrated than most of his acquisitions, although not much. What Honey is a browser extension, largely. They do a little bit outside of this, but you install it in your browser. When you're going to buy something, it looks for codes for you. If it finds it, great. You click on that, it applies it. It actually works very, very well. I like a minimalist approach. That's why I use Linux. I'm weird like that. So
That
That's one
is
of the
weird.
reasons why I like Tesla, by the way. Like the minimalism. It's like it's all about that. Apple products, no, no, no. But no, it's a good product. It's one that I think that they probably should have divested from, although they have launched their advanced offers platform on that. But the reality is, Honey is a very, very small revenue generator, most likely. They don't break out the actual revenue, but we saw what it was in, I believe it was 2019 that you quoted it from, 300 million, something like that, revenue throughout the year. It's not much compared to the entire mass of PayPal. I expect that's probably less revenue now than it was back in those days, which is not great, like for that 4 billion acquisition. So what happened is a YouTube creator, you'll have to help me out with the name, something
Megalag?
Megalag. Yeah. Good video. It's worth watching, especially if you're a PayPal shareholder. Like, you should know these things. He did some research on Honey itself and announced that it was a scam. I think that word was tossed around very, very lightly. There's nothing illegal in what they did. There's nothing scammy in what they did. But there is something that I think is immoral. Not ideal. I hope that they would change. And basically, it's this: that creators they'd actually pay creators when Honey was independent, I believe, and maybe even slightly after when they're under PayPal, to promote Honey. And as a result, they'd give them some money. And usually, creators will have some sort of referral codes and referral links for different products or setups. You click on that, great. You're going over to the website. You're going to make a purchase, and so the referral code will go back to that creator. Well, if you've installed Honey, instead it searches for additional coupons, oftentimes doesn't find it, and then Honey puts their own referral code there. The creator gets very little, usually nothing. Although if they do have that first click, it depends on the product, depends on the platform, but it's basically pennies on the dollar. And so, in a way, it was without creators realizing it. I'm sure it was in the fine print and everything, but who actually reads that? Taking referral money away from creators. As a result, creators are livid. There's a lawsuit, class action lawsuit, currently being filed against Honey, owned by PayPal, so it is against PayPal. Legal Eagle is involved in that. Marquise Brownlee had a video on it. He did. I actually really appreciate his approach. Love his videos. He didn't once, I think, say the word PayPal. And I'm like, okay, good. But it's Honey. Like it's all over the place. You look at headlines. It's all over the place in the creative world. I don't see it as much past the first couple of days on X. I actually don't see it as much other than the lawsuit news in the news recently. I think probably in the next month or so, this will be all but forgotten.
I mean, over the next couple months, that may be the case.
1 month.
I don't think so. I think it'll be longer than a month. I'll tell you why. Megaleg, this is a part 1 of 3 series. So he's putting out 2 more videos on this, on the Honey specific situation. I said this whenever it came out. Creators and YouTubers, they are a small percentage of the population with by far the largest megaphones. And the problem that I have with this is, like, I don't know. These people genuinely do have a lot of power. And you're seeing this from, I don't like the way you say his name, Marquez Brownlee. And like, these are not the people that you want to be on the bad side of, or Mr. Beast or any of these. Like they're going to tell their entire audiences, hey, stop using these products.
But have you seen any of them say stop using PayPal? Because I have not. I've looked intentionally for that, and all I've seen is, I'm uninstalling Honey. I recommend that you do too, and that's it. And for me, you can look back every single. I think I have, before this event, over like a couple years, 12 posts about Honey, and most of them are like, yeah, Schulman, man, he way overpaid for Honey, or man, this will be a great divestment, thing, or hey, it's actually being used for advanced offers. That's great. That's it. It's never in my bull case. I was never bullish on Honey. It was a colossal mistake for Schulman to buy it. I'm glad that they're getting some use out of it. But yeah, this isn't good. But I don't think that this does any damage at all to PayPal.
No, I didn't sell or do anything like this. I just think, like, companies are based on expectations and then the change from expectation. So everyone goes, oh, this is not going to kill PayPal. I'm like, yeah, I'm not expecting it to drive it to zero. But if they're expecting 8% growth rate and this drives them to a 6% growth rate instead, that's going to hurt the company.
Yeah, I don't think it'll have that. I can't unless you are seeing Honey generate a ridiculous amount of revenue that I'm just not seeing. I don't think that's the
But the
case.
problem is not just Honey generating the revenue. That can go away. I don't know what the percentage is of what is the click-through rate conversion uplift from Honey promoting it to PayPal checkout. Does that make sense? So on Honey, not
That's
only are
gotta
you
be
getting the coupon, but then they try to get you to check out with PayPal. What's the
yeah.
uplift percentage on that?
Yeah, I just don't think that that's very high. It's never been a compelling part of the thesis for me. I know you were more excited about Honey than I have been until now, because of this event, and it makes sense, But I've just seen it at it's kind of like Zoom, like oh, Zoom exists. That's right, I forgot that it exists because why? It makes so little impact in PayPal's thesis. It's an acquisition that was not well integrated. It's one that they thankfully didn't overpay as much as with Honey. My goodness, $4 billion for Honey.
But
Um,
I think that goes to show you people can just say it's an overpayment, but what percentage of the ecosystem is that? Like, do you think that that's
Very low.
just overpayment, or do you think that that really goes to show you that it does have thick ties to the rest of the business?
I mean, look at what Dan Schulman did.
Yes, yes.
So no,
But look at what Alex Chris did. He didn't divest it,
yeah, he didn't divest it.
and he was in a divest mood.
Yeah, it has. Well, I think that there's maybe a couple of reasons why. One is so Happy Returns was what he divested,
Mhm.
and they actually made a profit on it. And it was not like necessarily integrated well into the PayPal ecosystem like everything else that Dan Schulman did.
This is
Um,
so wrong. I was using Honey. You just met someone that was using Honey.
no, there's plenty of people that
There's a
do.
ton of
Honey's
people.
website says 35 million, although I think that's like 35 million that have like ever used it or something. But there are active users, and it like let me tell you this. So I've been looking at Ibotta, which is not quite the same thing. They partner with manufacturers and businesses. They also run the rewards for Walmart and several other big dogs. I think Dollar General is another one. And then they have when you buy something, you scan the receipt. It then gives you a credit based on whatever coupons that you clicked out before. The user experience of that is not great. It's just not. And the whole time, like before this Honey thing came out, I was looking at Ibotta because it's a fairly new IPO. It's been out more than 6 months. It's gone down quite a bit to a reasonable price. I don't ever do IPOs. I always wait 6 months at least. Basically for this reason. And sometimes I get it wrong, and that's fine. But as I was looking, I'm like, hey, these guys have no debt. It looks like because of stress on the consumer that they're poised to do very, very well over this next year. I still think that's the case. The thing that is actually holding me back from buying any Ibotta is the user experience. I'm like, it's not very good. I wish it was like PayPal Honey, where it just was you set it up, it looks for you, it applies it for you, and you're done. That
And
would be
you're
phenomenal.
confident that they are not doing a similar revenue share, or like that's how they make a portion of their revenue?
Ibotta, no, 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 no. They don't operate like that.
Not a chance.
It's no, it's very like it's there's two segments of the business. One is running the rewards program for a few major retailers, and
Mhm.
they seem like that they're adding on to that all the time. And then the other side, those that are manufacturing goods and services that are like, hey, we need to move this product. We want people to try it out. They'll work with Ibotta and be like, okay, well, we'll allow you to have like 100,000 or 500,000 or a million redemptions of this dollar off Crest toothpaste, whatever. And so then people will see that they'll manually click on their phone. And I've only used this like looked at it a couple of times, so I've been actually even used it in a store because I'm like, hey, going on vacation, it's annoying. I'll try it out, later. You also have to like redeem a certain amount for you to cash out. It's not the best user experience at all, and yet there's still a lot of people that use it. And I was like, man, if these guys had something like Honey back ending this, It would be a phenomenal user experience. It would grow even more rapidly. That's not their problem, though. Their constraint is basically those manufacturers giving them the coupons that they can use on their platform. And largely what the CEO had said in Q3 was that they're waiting for that new year for a lot of those deals to refresh. I think that it was a fantastic return on the dollar ROI on those that were actually using this with Ibotta. So we'll have to see if they actually do carry through, and they've partnered with some massive conglomerates as well. But no, they're not doing the same thing at all as Honey. There's no chance at all. If they were, they better stop. But I don't see any way, like in their technology. It feels like it's 5 years behind.
Yeah, I don't follow the company, but yeah, I just think every single one of these browser extension coupon cutting type service, like even Microsoft does this. This practice, I think will go extinct. Like, I do not think the internet will put up with this. And I know the internet seems big, but honestly, it's very cult-like. Like there's these groups of people that have this sort of sentiment, and they'll stick by that. That's honestly why I think Unity got killed. Was you went against the internet, and the internet said, "Hey, like, boycott Unity. We are stopping Unity, and sorry that we're putting these projects on hold." And the internet went, "No, perfectly fine. What they're doing is shitty."
I disagree.
How so?
I think Unity they went against their customer, not the internet.
Yes,
so very specifically, it's the developers. It's not. There are a few passionate, people that play video games that don't create, that probably actually cared about what Unity did just because their developer said something and they like that developer. But that's very, very small. That kind of
I think you're wrong.
behavior, it rarely translates, especially with those type of games. And in the creator world, it's the same thing. It's actually even more so, where developers were directly calling out Unity. PayPal it's a little bit different. So, Honey is getting the headlines, and usually PayPal is mentioned in that when news articles do their job because it is owned by PayPal. Creators are just on the rampage against Honey specifically, not PayPal. And it is mentioned like it is owned by PayPal. And they're not saying, "Hey, stop using PayPal. I've stopped using PayPal. I've removed everything." I've not seen a single instance of that. I'm sure there is probably one or two people out there that do that, but that's not the case. And it's just this one product. It's as if like Venmo or Zoom or something was under attack. Most people don't even recognize those as part of PayPal's ecosystem because of Dan Schulman, and he was just so siloed with every single thing.
Well, I think they were siloed for a long time, but now it's PayPal by Honey, PayPal rewards. Like, I don't know. I feel like they slapped a lot of the names onto those things actually pretty recently. But
And the other thing too is the CEO that acquired Honey, and that if he wasn't aware that this practice was going on, like he should have been, he's gone. Alex Chris is a new CEO. He has not commented on this, and the reason why I'm almost certain is because of the lawsuit. Like they likely knew that there was a lawsuit coming, and when there's a lawsuit on anything, like CEOs are told by legal to say absolutely nothing, to say no comment, or I can't comment on ongoing legal proceedings or whatever. Like they just don't. Like even the most loose-lipped CEOs say absolutely nothing. And so I don't know that we'll see anything or that we'll hear anything from Alex Chris. Somebody asked, I think Sagig, if he's going to say anything in the next quarter. I'm sure he'll be asked, but they'll not even mention anything. They probably won't even mention Honey. And you know what? If you look at the entire last year of earnings call transcripts, guess how many times they mention Honey?
probably next to none.
Not just next to none.
None.
It's none.
Yeah, but here's the thing. I think that this is the wrong approach, or at least from my perspective. I think that they need to address this and potentially just simply cut it out. Like,
I agree.
One, it could be legal fees for them. If this class action actually does pan out, like what SR was saying, that this could be considered a type of wire fraud. But they still could potentially put those affiliate links on people's purchases that are not already have a code for an affiliate. That's probably the bulk of what they're doing, is putting on honey coupons onto non-creator affiliate links already.
Mm-hmm.
So that wouldn't hurt anyone. They could do that perfectly fine. Yet, who knows? Who knows where they're going to stick with this?
Yeah, the lawsuit makes it more challenging, but like the right thing to do would just to be come out and say, hey,
Yeah, but I don't want them to be
this is,
quiet.
oh yeah, but the
Say
right thing is
something.
like to come out and just say, hey, yeah, our bad. That's not how we want to operate going forward. We're going to make things right with the creator. We're talking with them as far as we're trying to reach a settlement with them. We've already changed, not because we're required to, but because we do not want to operate our business this way, so that we're no longer taking these referral codes, and just leave it at that. And I know on the Mega Lag video, there was a couple other things where it's like, it's not always finding the best. Like, that's not a big deal. Like, if that was all that there was to the honey thing, he wouldn't have made the video. But the big deal is, and I agree with you, is ticking off creators and reputational damage. But
Yeah,
I
but
don't think that there's very much damage here at all.
the not finding the coupon is not the part that I think is the legal problem. But
Oh
that's the
yeah,
part that
no,
actually hurts the consumer.
yeah,
That's where you're not just affecting the creator, you're affecting the consumer. And I do think that affecting the creator, like, I know you don't see it the same way with Unity, but Shopify raises their prices like nobody's business. They'll increase it by 20%, 30%. None of those creators say, hey, we are switching from Shopify, and they tell their user base, hey, this is why we're switching off of our B2B software business. There's never been a company in history that says, hey, sorry, we couldn't get your order through. Salesforce is the one that's, screwing up our day. That's never happened. The internet is a different place where they come out and they say, Unity, Adobe, these sort of places that are hurting us, boycott them. This is why, we are going to take a little bit of time, potentially even cancel our projects and move it over to a different software. Hopefully you can support us on that journey. Go to our Patreon, go to whatever. And the people will generally support those creators, those developers, because they like the product that they're putting out and are willing to support those creators while they switch away from those businesses. It's not
yeah.
like regular business. Like I think you're not giving the internet that credit that they can sort of cult together to boycott a
And you're
business.
giving it way, way too much credit. I mean, like you even see
I've been
that with
around this
social
for too
media
long.
with X. A lot of people were mad at Elon Musk, and so they create, Mastodon, which went extinct like the Mastodon. Blue, whatever, I don't know what it is. Threads exists. That's
But they
about the best
didn't
thing you can say for it.
but they didn't offer a
It's
better product.
and that's the question is like, what's the better product out there than honey? There isn't one to my mind.
Yes, there is, because they're not offering the coupons. So go to a
No.
website that's just going to give you
The
the
actual
coupon.
user experience, what actually backends the technology, it's seamless. It works very well, and I still don't use it because I'm a minimalist. But no, if you have something that's automated that gets you most of the best rates as a consumer, you're going to take that over something like Ibotta, where you have to pull up your phone, swipe through, and see some recommended ads based on your behavior. Maybe, I don't even know that they have that. They say that they do. I've not used it. I need to. And then you manually click, and then you go and you buy something, and then you scan the receipt, and then you have to save up $25 worth, and then you redeem it through PayPal. Actually, that's a terrible user experience, and yet people still do that. Now, as far as the creator and the outrage and everything, usually it's a flash in the pan, and then that's it. And it's not even in this case being targeted at PayPal. I would have been very concerned if in the first few days that creators were not only angry at honey, but also saying, you know what, I use PayPal for everything, and I'm not doing that anymore. If I was seeing that left and right, I'd be like, okay, PayPal's not dead, but this definitely hurts the thesis. That's not the case. I've not seen that at all. Can that change? Sure. We'll see what parts 2 and part 3 of the Mega Lag video are. The other thing too is on these multi-part videos, unless Mega Lag is saving up, and it seems like maybe he is because he alluded to it, but I don't know. Creators' mindsets, think of things like it's more important than they really are. Unless there's like some huge bombshell that no one is expecting that comes out with part 2 and part 3, these will probably get a day worth of viewing and then be forgotten. It's the first video that matters.
Yeah, that could be true. That could be true.
I mean, if Honey comes out and they like funded assassination attempts on like certain presidents and stuff, that would be bad. I would be pretty bearish, and I would sell PayPal at that point. But barring that,
Or
I just don't see it.
I'm like I said, I'm not selling anything. Um, you know, just sitting around right now holding, but I'm certainly not buying right now. Now let's talk about you wanted to talk on Tesla really quickly, probably on deliveries.
I mean, deliveries, sure, but like the main thing was the experience.
Oh, sorry. Okay. Yeah, go ahead.
So we took and I have a video that basically is getting no views, but if you're interested in Tesla, the experience with full self driving, with the superchargers, all of that, definitely check that out. It's about 12 minutes long. So we went on this road trip from Houston to a little bit north of Phoenix and back. And I'm not usually paying for full self driving, but because they make it available as a monthly subscription, I went ahead and did that. I said, I'm going to do that. I'm going to do the premium connectivity, just make sure that we're traveling right. We're going a long way. It's going to make that drive easier. May even mean one fewer hotel stop. So it probably pays for itself. So I went, this is 12.3.6 on a Model 3 2022. And I think we had 2 disengagements out of the entire 2,500 plus miles. 2. Now, there were a couple of times when it missed a turn, and there were a couple of times when, because it hates being passed on a country road, that it is the craziest thing. It would
Jerk out of the way or something.
we'd be like out in the middle of nowhere in the desert, and it's a 2-lane road, and maybe the speed limit's 55. Great visibility, no issues, and so it goes 43, and so I'd hit the accelerator, go back up to 55, slow all the way back down. Apparently, version 13 fixes this. But when somebody gets behind you and then wants to pass you, the Tesla is like, oh no, you're not going to do that. So where it was going 43 moments before, it slams on the accelerator and starts going like 58, 60, 65, 70 until they either give up and get back in behind me, or I end up saying, you know what, you're being a freaking jerk, Tesla, and I'll cancel full self driving at that point. For that little bit until they get past me, and I did that 3 or 4 times. It's really annoying. I've heard version 13 fixes that just on the rural highway. Now, where so full self driving experience, I'd give it an A grade, not an A plus, just because of that. There were 2 disengagements, and there were 2 times when it missed a turn. Once was because of traffic that I probably would have missed. The other, it just screwed up and cost us 10 minutes. So, but it happens. 2,500 miles. The supercharger experience is where I actually had some concerns. So we went all over the place. I think we went to like 10, maybe 11 different supercharger terminals, and every single one of them, had units that were up. The Tesla supercharger network is supposed to have phenomenal uptime. I believe 99.9% uptime. And when we were going out there, we actually had one that was not up. Like it had a terminal that was down. I was like, that's weird. There's some sort of weird error here. And as I was backing up, I saw that, and it just said terminal, whatever it is. 5B is out of order. Please pick a different terminal. Like, what happens? No big deal. Don't use a supercharger that much. When we came back on our trip, I believe half, so 5 of the stations that we went to where we pulled up to get charged had a pump or a terminal, or rather, I keep calling them pumps, down. Some of them were taped off. A lot of times they weren't even that way. There were some version 4, the newest version, that were that way as well. There was a whole row at one point. There was a very small charger station where I think almost half of the units were out. And I'm like, okay, this is not what I had heard that the supercharging network was like. It was not what it was like back in May when I initially bought the vehicle near DC, drove it all the way down to Texas. Didn't encounter this a single time. We've used a supercharger just here and there sporadically. And I was wondering in the back of my mind if this had to do with Elon Musk canning the supercharging team. Now, the good thing is I asked a few people to, just retweet the post and everything just for visibility. I didn't know how to report it through official channels. Apparently, there's a way to do that. But I had a Tesla engineer actually reach out to me through direct messaging and just asked if I could go ahead and share with him the locations and so that he could look into it. And so they are taking it seriously. But yeah, that was really not a good experience at all.
I'm surprised with the V4 chargers as well that you saw there, because that's relatively new. So
yeah, that was in Bastrop too, which is like right outside of Austin. It's like in the Tesla hub. You would think
they would have to
not
be
want
pretty close, I guess.
Yeah, so it may just be that they're getting them installed and they're missing a part or something. It's a holidays, who knows? But for like 5 out of the 10 stations that we went to that had issues, is like, this is bad. And some of those were quite busy. There's a lot of Teslas. At one point, I think there was about a 30 or 35-minute wait. Thankfully, we got in before people started mounting up. And the frustrating thing is, if you did not, if there was only one place where it was taped off, so it was clear that that was not going to work. Everywhere else, there'd be somebody be like, oh, there's all these cars waiting. They'd be looking around. They say, well, I'm going to go ahead and park there. And then they get back there and it has a notification like, hey, out of order, try a different one. And so you'd go back and then there'd be another car that would do that. And it was not a good experience. It's not the way that the supercharging network has been in the past. That's something I'm going to definitely keep an eye on because if the quality goes downhill for this, and related, we talked about Robinhood. Some people have mentioned that they thought the customer service had gone downhill. I've not experienced that, but if your reputation and what your service actually goes downhill, it's just not the same quality. That's a concern, a lot more so than PayPal Honey doing horrible things.
You're right. All right,
let's end the show. No, just kidding.
No. I wanted to talk really quickly of another stock. Maybe we can compare different companies that we've potentially gifted for Christmas. Just wanted your opinion on my joke one here that I gave away today. I have it up on screen. Up 20% today, almost 21%. Almost breaking $10, which was higher than what you guys thought it was ever going to get to.
Oh no, I never said that.
Yeah, it's doing quite well.
It's a bull market, and in a bull market, sometimes the garbage will float to the top for a little while before it sinks.
Yeah.
If you look at Blade, I think went up a lot today. Archer also went up a lot today. This is not specific to Joby. In fact, a lot of Blade went up 12.5%. Archer went up. Nope, that's
20.27.
Yeah, 20.27. It's just eVTOLs. It's and also
I'm not against the other ones, but
no, you are.
Everyone laughing like this wasn't a good 1-year play. I think that it might be. It could be.
No, absolutely not. These sort of companies are great if you're a trader to trade back and forth, just like Rivian. Rivian went up an amazing amount today. And by the way, in Q4, they'll post profitability for 1 quarter, and then that will be it for a long time.
These eyes? These are skeptical eyes.
I can't see because of your glasses there. So you're just pointing at your glasses. I don't know. But no, that's the thing is this is a whole year. If this is a week, it'd be like, well, Joby blew him out of the water. Congratulations. But there's 51 other weeks. Joby is very, very volatile because it's an unprofitable small cap, and barring massive approval and adoption and massive contracts, which I don't think they're going to get. I could be wrong. I just don't think they're going anywhere. In fact, I even asked a relative of mine who was in aviation. He's retired now, but joined the military, was on the military side, the Army, Special Forces, all of that, and then ended up on the other side, on civilian, working for 2 different companies with aviation. I asked him what he thought of eVTOLs. He's not impressed. He's like,
you know what? No offense to him. I don't care about his opinion. That's like asking an old mechanic. You said retired. Ask an old retired
2 years ago.
What?
2 years ago. He retired less than 2 years.
Ask a retired mechanic what they think about Tesla. I don't care what their opinion is. They don't get it. Okay. So they want the way the old world worked. I don't care. This is the thing. I'm not buying, this company. I don't care about which one of them works, but for a 1-year, 12-month pass in a Trump election,
Nah.
FAA approval, things are pushing forward. Not worried about your grandfather's opinion here. Okay. We're up 20%, baby, and we're working our way. We're going to be the number one, me and Tevis. I'm taking him to the top.
I thought the goal was to make money because Joby's going to go the opposite way.
No, he's already up so much.
So if you look at Joby, though, like just look at the price action of the stock. It has done this before. It will do this again. Certainly the one thing that I'll say on Joby is Tom Lee, made a prediction for 2024 that small caps would do very, very well. The Russell 2K made some predictions. It's about the only thing that he got wrong over the last year. I think that that's probably due this year. And of course, Joby falls into that. So I think Joby will do well. By the way, that's good for SoFi. Even though it's not a small cap, it trades like a small cap. So it's a really good thing for that as well. That's a benefit for Joby. But I think that's about it. The rest is it's just a roll the dice, gamble. That's really what it is. And there's nothing wrong with doing that.
And we're going to get snake
I
eyes,
appreciate
baby.
you being honest on that because you're not, if you were actually bullish on this, you would own some. And you don't.
I'm not. But I just don't like how this is what I genuinely don't like. All of you guys are 100% negative on something that's a 50-50% chance of being top 5 or
50-50. This is not a 50-50. No. In 1 year?
Yeah.
No, even if it was 10 years, it's not a 50-50. That's the nature of eVTOLs. They're not proven. It's not clear who's going to emerge as a winner or win.
I'm not talking about. So here's the thing. I'd say the chance of it being a success over 1 year versus 10 years is actually the same because I don't know if they're going to do well. But I think excitement is a 50-50% chance of doing well, and that's all that the stock matters.
Man, I'd maybe say 20%.
And you know what? Joby, larger than Archer. All right?
It's not Joby. You can't say Joby, man. You're mispronouncing it.
Joby. I don't hold it.
It's named after the CEO, Jobin. He's got 2 first names sandwiched into one.
Joby is larger than Archer, and you keep calling it second place. It's coming for the whole pie. Okay.
I actually, somebody even brought Blade to me that they're building out the infrastructure for these. I'm not investing in any of these. I don't know about eVTOLs. I don't know if this is the way. It's kind of like a few years ago, there was a company, Sarcos, that had like mech suits, basically. I don't know if you've seen those, like the Iron Man type things, just like the first Iron Man that Robert Downey Jr. Did in the cave in that first Iron Man movie.
I don't think any of those are going to do well.
No. But several years ago, like 4 years ago, 5 years ago, people were like, "Oh, these are going to be amazing." I'm like, I don't know about that. I think
drones will kick off way before those kick off.
Yeah, exactly. Like, and people know that now. And I think that drones will do the same thing to this eVTOL business. Now, there are some places, especially with the vertical takeoff, that in the carrying capacity where they'll be okay. But I think they're going to be a very niche product. They actually remind me a lot of. Do you know Arcimoto?
I think I've looked into this a real while ago. I mean, like 2020.
Yeah. Let me show you their stock first.
I think I looked into this a long time ago.
Wow, they changed their ticker? Maybe I'm misremembering their ticker. Let's do that one.
Or they've delisted.
Yes. Look at that. All the rage back when it was EV everything. They're basically a very, very small product. Let me see. Arcimoto. I'll show you what they look like. Look at these little things. These were the eVTOLs on the ground. And some people were like, these are the coolest things. And I'm sure that they were fun. But the question is, like, who's going to use these? These basically are the Segway of the EV world. And the Jobies of the world, unless there's some use case that I'm completely overlooking, that could be the case. The vertical lift and takeoff and the carrying capacity are good. I think that they do have a place, but it's going to be very niche. They are the segways of the aviation aeronautics world.
So Nick says, have to own S&P for the whole year to find gains like what Joby's putting up. Now, can I ask you something?
Sure.
For the Christmas event, can I tell Tevis to sell and potentially lock in those gains for the year?
Nope, that's not the way it works. If it was a trading game, then I would have done something a little bit different. But
Sure. That's fair. I'm not telling him to get into anything else. Just if I could ever lock in. Plot twist, Amazon buys Joby. No, that wouldn't happen. They don't need any they don't need anything they have to offer. But like they own Uber Elevate. They bought it from Uber. They're going direct to consumer. I think that as an investment idea is going to yield potentially higher gains than what the other players might be saying. And like with Uber on their side, I don't think that this is a burn and die situation.
yeah, I mean, they've got a long enough cash runway that they can see if the technology will actually take off. It'll
Much longer
actually
than
be.
Archer.
It'll. I disagree. I mean, there can always be new partnerships, new money supplies, and then they have Palantir on the back end too. So Archer is actually really fine. You look at the partnerships, the quality that they're actually coming out with.
Partnership with Palantir should show you that they have a shorter cash thing because they're spending on this super expensive software.
So
that doesn't mean that
are
they
you
have more
bearish on
cash.
Shift 4 then? Because Palantir backends the technology?
Sorry?
Palantir backends Shift 4's technology. So are you bearish on Shift 4 because they're spending money on that? No. The ROI.
No. I said they have more cash. You said
and
no.
It's exactly what companies like this need in order to optimize their supply chain and be able to actually deliver what they need to as a product. So
but the reason that they have Palantir doesn't make them have more cash. That makes them have almost less cash.
You're assuming that they get absolutely nothing from Palantir's product.
No, but you can't just assume success because they partner with a company, or else every company would partner with Palantir.
Yeah, like Lilium was one that was actually in this space that went belly up. They were one of those SPACs that Palantir partnered with 2019, 2020. They're no longer exist. So it's not a guarantee. I'm not saying that. But they were actually thinking about their back end as well as far as their technology versus Joby. All I see when I looked at this company, and I may have looked into this company more than you have, honestly. I don't know how long you looked at it. My pushback, by the way,
I didn't look at it at all.
What do I not like about Joby? I have a relative that owns the stock of Joby. And, she bought in a much lower level. I'm like, hey, may make sense. She's looking at it over the long term. She's looking at the industry. That's the right way to take this. And it's also a small position. That's the right way to approach this type of stock. What bothers me is it feels like you pick this not so much, there is a chance that you'll be able to win. There is with any of these stocks that we picked, all 5 of them, even Lemonade. Even though Tevis picked it, it can still win. But it feels to me, and I could be wrong, and you're saying this is not the case, but it still feels like you pick this out of spite to give Tevis a big stinker because he got you with Unity last year. That's my issue. And looking in this company, it's basically press releases. It's big smiles that are kind of nervous with their CEO. I'm not seeing, look at what Archer is doing. Look at what Blade is doing with the actual infrastructure. I'm not saying it's a fake company like Nikola. I always say that one wrong. They have a real product. It's so risky. And over a year, I don't know. I think it'll have days like this where it's going to be phenomenal. And then this next week, it could go down 15, 20%.
Oh yeah. Yeah. I just think, I realize that the game of giving super quality companies that don't fluctuate largely are not going to win. Like one of the reasons why you won last thing on Robinhood is that it was a very bullish year. If it was a very bearish year, you would have came 4th.
Oh yeah.
So
building confluence.
Yeah. So I think the same thing with Joby. I'm not trying to give him a stinker. I'm trying to give him a high volatility company that will come first or fifth. And that's what Hood was. Hood was first or fifth.
I
Well, I
don't
mean,
know.
no, I can't say fifth. It wouldn't have gone below Unity.
I think it probably would have been second if it was just an okay year. Just because of where it was at. It's like $13. Like I saw a base case of it ending up at 26. Of course, it went a lot more, but that's a double. That would have been second in our competition to SoFi. Is that correct?
Yeah, I mean, we don't know. I think there was a big sentiment shift, and a lot of that was the bull case. Like I don't think that everything has to trade on its fundamental. Like, or SoFi
Oh yeah,
would have ran
I
way
agree.
earlier than when it did.
And so, like Joby is basically a biotech. It has nothing to do with biotech, but it's going to trade like it. Where you look at the cash runway, you look at the TAM, you look at the use case, you look at differentiation, and then you wait for approval, and you make sure. And so, like if somebody is investing in Joby for the long term, I have no problem with that. My sister is invested in this. I think she still holds it. She's made some money on it too. But you make sure the cash runway is where you make sure the product is there. But these things take time to come out and actually be able to perform. And so Joby is one of those where if you hold it for 10 years, you're like, hey, it's a coin flip this year or next or 10 years. I disagree. I think it's a lot less chance than 50% that Joby will work out. But if it works out, you're going to print money. You're
Just
absolutely
as a
going to print
stock.
money.
I'm not talking about them being like, I'm not betting on profitability. I'm not betting on customer base. I'm just betting on the stock. And look what just happened today. It went up 20% because sentiment became more positive for the industry. But I promise you, I'm not following the company. But it just goes to show you, like, this is not just, oh, I threw him in something that is just going to go down. No, it's a coin flip. It's gonna go
It's
up
not
or
a coin
down.
flip. It's not a coin flip. It's not a 50% chance that this thing will win or even be positive for the year. It's not.
I don't know. The FAA looks pretty positive on this industry. They want to work with them, I think.
We'll see.
Toyota is throwing hundreds of millions of dollars their way. That's not happening if this is not, like, they are betting on way more than a 50% chance of success. You look like that number is not correct.
No, it's okay. So I couldn't remember the name of it, but yeah, when EVs were all the rage, this is 2020. There were a lot of partnerships as well thrown out there, and it's like, oh, Workhorse was one of those. Do you remember Workhorse?
No. Were they the largest in the sector?
They were the largest in the sector that were delivering specifically commercial trucks. They had a contract with, I believe it was
That's a
USPS,
caveat.
and it ended up blowing up for a variety of reasons. But they had a lot of partnerships. Rivian had a partnership, of course, with Amazon and with Ford. They're still not profitable. They will be in Q4 just
That
because
doesn't
of
matter.
where the tax credits are.
We're betting on
It's
the
a
stock.
question of whether or not they'll actually be able to make it. Now, I know you're just doing the stock, but as far as you can't say that Joby has a 50% chance it's a coin flip in a year or 10 years. It's way, way less. It's like CRISPR, it's a great stock, biotech. It's a lot less than 50%, but if it actually prints, it's going to do very well. Intelia, same thing. Abcelera, I'm in that one. It's actually one of the most speculative names I'm in. I think it's going to probably do nothing for like 5 years, but it can blow up in a good way at any point. There's real things that they're actually doing, but it's a biotech. It's in the biotech industry, and that's the way it works. Is you make a very, very small bet, like a 1% bet on a company that you're like, hey, I think that this is going to do really, really well. Abcelera, I would not give it a coin flip. I would not say, it's 50-50 working out. If I thought that, Abcelera would probably be 25% of my portfolio because, that's an easy, like 10, 20x. But, the reality is it's like, I think that this company has, because it's in Canada, has about a 10% chance of doing phenomenally well. I'm willing to take a 1% bet on it. If I lose the 1%, fine. If that 1% goes to 10%, that's great. That's how I would encourage people to play it on very, very speculative bets that are not making money, that don't have a clear runway to that are waiting for approval, which can always be just around the corner and then never happen.
Let's be fair.
All
We know roughly where Tevis's portfolio is at. It's $100 bet. You
Oh
know,
yeah, no, and that's fine. So
it doesn't even show up on a pie chart.
I'm just saying this. Like my issue is not with Joby. You know, if people want to bet on Joby, you know, I have a relative that did that. That's fine. You may make money. You may make a lot of money. I just want to. I feel like you've done it not with a goal of winning, but making a meme and making Tevis pay. And I know you love the guy, and I know $100 for him is like that's not even a Canadian penny. It's like it's nothing.
And he's not even betting on it, by the way.
But the other thing too is like I'm cautious, and I think that maybe next time we do this next year, we should just like give a caveat, you know, with our viewers, like especially if it's a stock that we do not own, which we're changing the rules, so you have to own, you know, at least $1,000 worth to give $100. I don't want somebody to follow you that don't even own Joby into that trade, especially after this week where they're like, wow, it's gone up so much. It's going to print so much money. Hey, it might. And I hope if you know, whoever bought Joby, including Tevis, that they make a gobs of money, but it's a risky play. It is not a coin flip. It is not a coin flip that it'll work out, that it'll end the year up higher than it is right now, even in a bull market.
Yeah. So I completely agree with you. I'm not buying it. It's a fun game where we're just trying to pick the stock that goes the highest, and you know, we'll see if I'm there or if I'm not. But either way, I don't even think he's playing by buying it anyway. So
you know what I was tempted to do though on that bet is pick Robinhood again.
yeah.
I was hoping it would do what it did, where it went down a little bit at the end of the year.
Have picked it for me.
No, I couldn't have, but I didn't know who was going to be, you know, the person that I'd give to until the very end. If it was Tevis, I might have actually done Robinhood. There was another stock that I was looking at too that I might have given him instead, but I wouldn't have given him Palantir. That's for sure.
Got you.
That would have been funny.
Yeah, what's riskier right now, Palantir or Joby?
Joby.
I'd probably own Palantir before Joby, but I wouldn't want a lot of either one of them.
I wouldn't. I'm planning to sell some Palantir here in January, and so that should tell you what I think of the price action. Phenomenal company. I'm selling 20-25%. Joby, like it's Accelera basically in my portfolio. I got room for a 1% allotment of companies of that type. That's it.
I don't think you give it enough credit. It's a $7.5 billion company.
That doesn't matter. Do you know what the market cap was for Arcimoto?
No,
At the peak?
Yeah, but this is not peaking.
Workhorse?
This is not
Rivian?
The 52-week high on this company is more than double what it is. Or no, that's not true, but close to 70+% higher than what it is right now.
Where was Nikola back in its peak?
That was an actual fraud. I think the dude's in jail.
Yeah, it's a fraud, but yeah, it's gone. But I'm just saying, you cannot tell the legitimacy of a company and how good it is by its market cap. You can't. And I say that as somebody that owns Palantir, but like Palantir's market cap, if you consider it a defense in the defense industry, it is the biggest and largest market cap for any defense player. Now they're a SaaS company, they're a phenomenal company. Do they deserve that? No, not yet.
You know, the PEG ratio is like 10 right now. Like,
yeah, you know, I'd have, you know, maybe squabble with you like, but like it's not deserved where it's at. Market cap is a poor way to judge the efficacy of a company, other than just seeing the premium that the market is willing to spend on it, and that can very quickly go away, especially when things turn bearish.
Yeah. Anyway, let's move on. Is there anything else that you want to cover over the last couple of weeks that you haven't been able to talk about?
I mean, there's like been a little bit of news here and there. Nothing really stands out though, other than the consumer debt thing. Are you concerned? We talked a little bit about it earlier. Are you concerned at all with consumer debt and the resiliency of the consumer, especially after the very boisterous holiday spend?
Yeah, no, I'm not concerned. I think we're still far. I think this is normal territory for sort of fluctuating, and things can get on the higher side. But like you said, I think there's a lot of like, or I think this was you tweeting about how it's kind of like uh, almost doom speak. Like they almost are just trying to cause a situation. Um, I'm honestly extremely, extremely bullish over the next probably 12 to 18 months. Um, I'm like, I think everyone forgets how long bull runs actually are.
Oh
And they're
yeah.
always like, oh, you know what? This is like, you can always find articles or headlines or large analysts that come out and say, no, this year is going to be a bad year. No, this year is going to be 2023 was supposed to be terrible. 2024 is supposed to be terrible. Now 2025 is supposed to be terrible. Things can happen over long periods of time. AI is stronger than ever. I think the consumer's doing okay. Unemployment's good. I'm not too concerned.
This is one of those things that I almost forgot about too, that I thought was really interesting. Somebody else posted it, but cumulative returns of these ETFs intraday, the blue line, and overnight. And you can see overnight 24-hour markets. I mean, they're increasingly a thing. Robinhood has disrupted the industry to the point where, even major brokerages are like, hey, 24-hour trading, we need to do this. I know not everybody's excited about it, but giving access to these tools is pretty phenomenal. Yeah, I agree with you. I think that
This is just earnings results, though. Like this is essentially, press releases and earnings results happen after hours or before hours.
I mean, that's not all of it. Like, there's wars and rumors of wars and some announcement here or there. But oftentimes, like this is basically just showing like if we lived in a world that finance wasn't democratized at all, that we didn't have. So let me just actually go back to 2008. 2008 was the second time that I tried to dabble in individual stocks. And as far as tools that were out there, it was so limited, and that was a lot better, of course, than back when you actually had to get on the phone and call a broker and have them execute this order at this price or at this time of day. Um, but rich and wealthy people, they could be able to do what they wanted to largely, and so this has very much even the playing field. Where I caution people about using the overnight markets. It's low liquidity, but if you know what you're doing, or you want to get your buy-in and get it set before you go to work and you don't want to forget, or some event has happened and you're like, hey, the market's getting this wrong, it's a great opportunity. But just be careful with the low liquidity. But having access to tools like this is what it's all about. And so I think it's really exciting, especially as like you. I think that barring tariffs interrupting things or a black swan, I think we probably go through 2029 in a bull market.
Yeah, yeah. No, it's very exciting. Um, yeah, man. I think that's a good summary. I think we need to bring up more often on the Robinhood Weekly how much 24-hour markets is just going to change the brokerage services business. Like more trading, more everything. You don't need more money to make those markets explode. You just need more frequency. And so people can make more buys. And it's just good for the day trader market, which is something that Robinhood really specializes in, is active trader markets. That's what they want to be number one in.
So one other thing that I did want to talk to you about, what are you doing with Nubank right now?
Holding.
Holding? Oh, what point are you going to buy? Whether that's a price target, whether that's a news catalyst, what are you looking at?
I mean, it might be a news catalyst. I don't know what the news catalyst would be. Positive earnings, something like this. But single digits would allow me to buy.
Yeah, I've not. I added, I think last in the 12s, and I'm like, I'm good until single digits. Um, this is, the short bear, and just Brazil has reached oversold territory, which historically has led to 54% gains over the subsequent 12 months. Brazil's entire economy, by the way, is very cyclical. Uh, so there, lots of recessions and then lots of times where the economy is growing great. This is nothing new. Of course, part of the reason that they've had a lot of issues is a Brazilian real. The government overspend, similar to the United States, but this is what happens when you're not the world's reserve currency. So it's not the easiest time. There are real concerns there. It's not just this is FUD and it's fake and just buy the dip. But yeah, I bought some. I'll buy, if we get into single digits, and I'll buy all the way down to whatever price it goes. A great company, but that one may take a little while to play out. It's one of the reasons why I wasn't too interested in picking Nubank for the challenges. With something like that, you don't know how long it's going to take. And recessions and bear markets tend to be a much, much more shorter lived than very good growth times and bull markets.
Yeah, I mean, I haven't seen too much commentary from New in a little bit, which also I think goes to their sort of, hey, maybe we need to sort of shift our plans. Maybe they're going into more of a defensive mode. I'm not sure, but I can't wait to hear their quarter, hear from management, hear what they want to do. Until then, like, I think people need to be patient. Everyone wants to move on these quick actions all the time. Like anytime a stock moves, they want to try to buy the dip. But whenever the unknown is like truly unknown, like let's just take a second here, especially whenever you have a sizable position already. It's one of my largest positions in my portfolio. I can say, hey, maybe this is not quite done. Maybe I can get this in single digits, or maybe I can just wait to hear more from management before I make my decision. They've been kind of in the dark right now.
Next couple of earnings will be really useful. And I think consumer stress, I don't know, it's also something to take a look at there. They're fine with current earnings, but we'll see.
I love this saying so much. He changed the saying a little bit. Don't let facts get in the way of a good story, but don't let facts get in the way of good propaganda is awesome. Yeah. Okay. Perfect. Any other names?
Not really. You have anything else to delve into?
Where's Tevis? Tevis is still on holidays, so he'll be back. But yeah, yeah, I'm super interested. As much as a lot of people are going contrarian, saying, big tech is not potentially where you want to be. A lot of analysts have been saying that. I've been super positive on big tech. So
right.
Buying Amazon, buying Google, buying Nvidia, and loving every second of it. So
how do you're a big culture guy and leadership guy, maybe not as important to your thesis as me, but I've warmed to Google to the point where I'm neutral, and we were very bearish a year ago. How do you get over that hump with leadership and culture? Are you just like, they print money, so forget it?
It goes in the negative section for sure. It's definitely the part that I dislike. Disliked culture, disliked the CEO. What else was in my dislikes? There was a few others, I think 2 others, but it very underweighted the pros side.
Oh yeah, No, I've been very impressed with what they've done with their commodity with Gemini. I think that they'll be able to scale it easier than pretty much anybody else's at this point. You look at Apple. Oh boy, they Apple Intelligence and innovation. It's not there, and that's really good for Google. Current administration coming in, I don't think that you have any of the government deregulation fears, as far as Lena Khan coming in and monkeying around. I'm interested if they had a healthier culture or a better CEO. I would like them a lot more. There is, and help me, maybe you know who this is. Maybe our commenters know, our viewers know. There was this quote. I can't remember who said it. It might have been Charlie Munger that said, "Buy businesses that an idiot can manage." Something like that.
Yeah.
Is that him?
Yeah, I think so. Charlie Munger.
Yeah. Did I say Munger? Munger.
Yeah.
No. It feels like Google might be at that place. I'm not sure. So I'm still going to stay away. I probably will buy Amazon, but no, I think big tech. It actually, if you look at performance last year, other than Nvidia, like it did okay. Microsoft did basically nothing. Tesla did okay, but I think that it'll actually have, for the next few years, like really, really good years. It's just so well positioned with what they've been doing.
It was crazy whenever, ChatGPT 3.0 was starting to come out, and then ChatGPT 3.5, and Google was just so far behind. It was crazy. And now they're starting to put products out at the exact same time, like Sora and VO2, and Google's got the lead.
Oh,
They
yeah.
have a way better product in video generation.
They do. It's impressive.
And I don't know if that adds to levels of like scaling laws for them, if that momentum from going from way behind to now potentially better in some of these products is going to continue. But it's clear that Google took,
Ooh.
a falling behind state and is now not trying to fall behind anymore. And they are getting into robotics. Like, I don't know. They're staying with it.
So this is something. Have you ever looked at this before? The LMSys chatbot arena.
I think I've looked at this one time for research on one of my videos that I brought up, but no, I don't go here often.
I haven't looked at it in a couple of months. One thing that I noticed a couple of months ago, this is maybe like actually 3 or 4 months ago, was Gemini had actually been climbing up the ranks. Basically, what they do is you'll ask for it to generate something. You'll have model A and model B. It'll generate it, and then you'll rate it afterwards. And so they come from that. They bring a leaderboard here as far as a couple of different metrics, but the arena score is really what you're looking at. Look who's number one. You've got Gemini, 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 Gemini. These are different versions of Gemini that they have. They also keep older models as well to a certain extent. ChatGPT 4.0, it is actually behind for the first time in a while. Well, it's basically tied though. So, but yeah, they've really, really done well versus like sometimes Llama 3 will come out with a newer and greater version. It'll do well. Claude, certainly.
Yeah, I'm surprised how low Claude is. That's crazy.
Anthropic's really low too. So Claude is Anthropic. Yeah.
Yeah, I thought the Sonnet Claude 3.5 was like one of the best. Because I was just listening to this podcast where this guy was using anyway.
Yeah, the great thing about this is you don't know the model until you actually get things over. So actually sometimes I'll use this just to, because I want it to generate something and then boom, it's right there. And sometimes they're both good and you can note that, but if there's a clear leader, you note that as well. So interesting tool. And it just, I'm not bullish on Google. Like the actual company, what they're doing, their tech that they're doing, I think it's very, very credible, good. Like the PE is very attractive, but man, leadership and culture, I can't get over that.
Yeah, but I also think that is changing there. Like
a little bit.
I don't know. I think there's a lot of pushback here. There were a couple situations back in Google's day where people were like protesting in the office of the CEO. And then people are like, man, like Google's literally losing like their offices. And then you see some pushback. They fired every single person that was involved in there. And I'm like, all right, well, that was probably a non-Google. Like, I didn't think that many people would think that Google would have that strong stance, but luckily they did. Like, so hopefully they get their stuff back in order. But the products that they're actually just launching and continue to innovate on are getting very strong. I'm looking at canceling my Spotify subscription because YouTube Music and Premium is just getting super good. So in this sort of fight, like they might win in streaming. I'm just overall like too many good products and Quantum and Wing and AI and GCP. It's too many things. It's too many things. I've surrendered. Cheapest of the Mag 7. NVIDIA, unbelievable name. I'm adding to that position. It's by far the largest position I have. I'm adding to it. Insane. I think people are just realizing like how much this CapEx race is not done. Microsoft just came out. They said they're spending $80 billion this year. That might even be shy. So like, this is just crazy. This is crazy.
Yeah, actually, I read an article. I probably won't be able to find it. Oh, there we go. Nope. That's on AI data centers. Yeah, CapEx is ramping. It's continuing to ramp. Like the Mag 7, if really, really led the way. Capital Exotics also posted there. Amazon, wouldn't it be massively affected by a Chinese 60% tariffs? Yes. A lot of the Magnificent Seven would. Google's one of those names that wouldn't. Everything would be impacted, but I mean, Google's pretty well positioned. You don't have like any Taiwan invasion scare, which Nvidia is taking some steps to try to mitigate that if that actually does come to pass. They have alternative revenue streams. Amazon will certainly get hit. Tesla will get hit. Meta, I don't know that one as well, as far as WhatsApp, if that's being used heavily over there or not. But yeah, Google's well positioned. So if you think that those tariffs will actually come, and you wanted to own one of the Mag 7, maybe Google is right for you. I'm holding off on purchasing Amazon for a bit. I'll just say that. I want clarity on the tariffs, and I think that is the one legit known bear case for the market. That if this launches a tariff war, that could be pretty bad.
Yeah, no, for sure. But then
PayPal would that's a bigger issue for PayPal than Honey.
Here's the thing, and I honestly don't look too much into those macro things as potentially I could. I honestly just look at the company specific stuff and then the overall segment and what it's doing. Stuff like that's completely out of my control. If these sort of tariff wars end up happening, SoFi will fall on that news. Like there's going to be few and far safety plays or defensible plays that might get you out of that area. And to me, I've never really done that. I've never probably one of the biggest weaknesses for me, maybe it's a strength, is that I don't rotate my portfolio for different situations because I've never been able to predict them.
Yeah.
Sorry?
No, I was going to say that's where I'm at too. Is I do have a hedge in mind that I'm not quite ready to talk about as a potential hedge that will make some people mad. But I'll just say it's in the buy now, pay later space, and it may not be the company that you associate with that as a potential hedge entering the year. Where if tariffs happen, that's going to be the puts will print. If the consumer is under pressure, puts will absolutely print as well. So, but right now my hedge is just having underwater covered calls on Palantir.
Tanner, has Shift 4 always been expensive? It's never been expensive. That's a company that has never once been expensive. But yeah, that's interesting. Maybe you can tell me off cam. Amazon, Nvidia, all these. Yeah. Anyway, I gotta stop. I'm just super bullish on this.
That's maybe what we should do next year with the Christmas list. This is just an idea. We'll have the legit $100 thing, but also a side challenge of which stock at certain market cap size is necessary is going to be the biggest stinker of the year. What's going to be the biggest drop of coal? That would be fun because that's really hard to find in a bull market. It's very tough. Even companies that you were written off and you're like, hey, this is a terrible company. Maybe Carvana would have been one of those a couple of years ago. It's like, wow, it's actually doing really well. Or Open Door or Redfin, if suddenly rates come down, like, man, it just printed. So even Walgreens is doing well.
Yeah, I think I would be terrible at that game.
It would be fun though. That's not my skill at all. But yeah.
Yeah. All right. This is making me want to make a video on Nvidia right now because I don't know. Even ByteDance is trying to buy some chips. Everyone just looks to the Mag 7 as being the purchasers, but might be a heck of a lot more in this cycle.
Agreed.
All right. Ladies and gentlemen, thank you all so much for watching. If you want to check out Roy and myself, we both have our own individual YouTube channels and X accounts, which you can see on the black bars underneath our names. Roy, you had fun?
I did. I realized right at the last 10 minutes, I was like, man, I should have been doing bookmarks on this the whole time. And I didn't. So
I don't do it. I'm sorry, guys, but I can't multitask like Amit. He's crazy.
Yeah, he is probably a robot powered by LLM of some sort. My guess.
Yeah. All right. Goodbye. Thank you all so much for watching. Bye for now.